Good morning, everybody. Signet here with the Bullish Bears. It is December 18th, 2019, 9 a.m. I'm going to be looking a little bit before the bell, see what we've had in the overnight hours, what we might be focusing on. This morning, FedEx, no surprise, got hammered pretty hard from their miss. Although they were talking about it on Bloomberg and the forward guidance, apparently they're going to start doing weekend delivery. That increased their cost projections, but also increased their forward guidance. I don't know. For today's trading, we're looking to take advantage of it. Of course, if we can get away with it, find some volatility and exploit it to our advantage. There was quite a bit of news throughout the session last night. And then we still had numbers coming in. We always want to check the calendar. Now, since I've gotten more into futures, the calendar that I check is not just an American calendar. The GDP and job numbers and labor survey and all the stuff that we look at here in America, other countries have the same thing. So when you're trading in futures, making sure you know when China or Japan or Europe has their earnings or has their PMI numbers and job reports, construction, and all of that can really give you an opportunity to trade some volatility. On Thinkorswim from your home screen, you can see the different time zones and you can identify when their markets are open. You can set a clock, a countdown to see when that ends. This is an often overlooked portion of the Thinkorswim platform. You can set watch lists in here and heat maps. You've got this scrolling ticker along the bottom that you can detach, and once you do that, you can change the tickers. So you could actually have one watch list here and another one here. What I like to do is put this above one of my web pages. I have to see the chat, so for an example, I'll have that sitting above the chat room so that I can see what is going on. Just one example. Want to use the tools that are at our disposal. One of those tools that is often overlooked is our own broker. So if you trade on TD Ameritrade or just using Thinkorswim for your analysis tool, you can go to TD Ameritrade and you can find analyst upgrades, analyst downgrades, recommendations, all kinds of articles and news. I've got accounts at Fidelity and E-Trade and TD Ameritrade. I will be opening one at Schwab just since they bought TD Ameritrade and Thinkorswim. It just seems like the appropriate thing to do. But for an example, I'm going to bring this over for a moment. Here's my E-Trade account, and you can see that I could enter a symbol and check news on it. I've also just, got the news as it's coming in. But there are also analyst recommendations. The analyst recommendations come from a company called TipRanks. I don't have an account there, and you can see that even though I'm not signed in, there are still free tools that you can use here, just getting analyst upgrades and analyst downgrades, and there are a lot of tools here that you can use that are free that you don't need to spend $30 a month on. But if you did spend the money and get an account here, it is $30 a month for like their mid-level subscription. You'd get a lot of trade ideas, right? And that's kind of what it's all about, finding something to trade. Earnings Whisper is another one. Even if you don't trade earnings, this has all kinds of tools in it. If you are a subscriber, you actually pay for their services. But even the free services that they offer here are pretty insightful and can really get you some great trade ideas. So take advantage of what's out there. earnings whisper, tip ranks, going to your own broker and finding, the analyst upgrades and downgrades, and you can do scans for all kinds of products depending on the broker that you have. I found that there's actually strategy optimizers here on E-Trade for options, and I'm going to go over there and play with that later today and see if I disagree with their tool, because I deal with advanced level options and options analysis, and I didn't think we could get better options analysis than what is offered on TD Ameritrade's Thinkorswim platform, because we can vol step and day step on that, and I've never been able to find anything remotely comparative to that. I might find something new today. We'll see later on. So we do have 22 minutes before the bell, so a little bit of time. I built out a couple of watch lists that are posted in the trade room. So if you go over to the Bullish Bears website and come into the trade room, you'll see the breakout watch list, long and short, and the momentum watch list, long and short. These watch lists are the way that I like to do business. I'm not going to just build out a watch list. What kind of watch list is it? Is it a high implied volatility watch list? Am I looking for a breakout? What are the rules for that breakout? Am I looking for a momentum trade? Right, and then I can use that and ignore anything that doesn't fit that criteria. All right, taking care of that business. So let's see. So is there anything in particular that you want me to review before I go over and invite the regular Bullish Bears members onto the stream? The reason I bring that up is because here in about 5 minutes, I will be starting the live stream in the trade room. And at that point, my attention and focus will be more on the members in our community and not on the chat here on YouTube. It's just the way the business is done. I see that Dan has been posting quite a bit on the Bullish Bears website in our trade room. He's got UNH, a lot of price targets really. UNH raised price target from SunTrust, LLY, Nike, SSTI, DDOG, Twitter, DRNA, BBBY, FedEx. Good stuff in there. Not a massive list, of course, because we don't want to get too big of a list. All right. MIRA was called out on the YouTube. Miracle Applications Corporation. I don't know if this is a biotech, but if it is, when we're using Discord, there are a lot of tools in here that we can use, including Pipeline. So you can go in and check a company to see what they have in the pipeline. It must not be a biotech. There's nothing in there. But you could check insider buying, CEO buying, all that kind of stuff. You can do a lot of things with the Discord bot. Powerful tool to give you all kinds of recommendations and analysis. MIRM. All right. I was wondering why that wasn't popping up because I'm not getting anything on there. Aha. Look at that ugly mess. All right. So also check that one with the pipeline. Yes, so they do have a little bit in the pipeline. I didn't read it, just seen that it popped up. Let's see. Third quarter of 2020 and fourth quarter of 2020, they've got, uh, it's too far away to be messing with today, but they do have things in the pipeline. The next thing that you can check is FDA. That one might take a moment. It, for some reason, does. I don't know why. So looking at the chart, yeah, it did pop up. Nothing in that list for MIRM. All right, so you asked about this ugly mess. Step back into a higher time frame. I guess that is all the time frame. There's not much more to step back to. This section, first thing we do is want to look left. You've got that $15 area, which hopefully will provide you with a little bit of support. This almost went twice the value in a day, right? You got to recognize that in a spike like this, the first thing it needs to do now is validate this new range. Okay, so from that spike up, it's in never before reached territory. It needs to confirm that this is going to be the new range, that it's going to be the new validated area. It hasn't done that yet. Markets want to fill the gap. It could take forever before it finally does, but at some point it's going to want to fill this in history. Look back at the markets when they gap, they usually want to fill that gap. But looking at this right now, it really needs to hold that $16 range, and the next thing in line would be the $15 range. So those would be areas of concern. If it can't hold that, I would be concerned about that. If you're short, then you're in a great trade. Be aware that these would be pivot areas moving back in the other direction. I don't know what your time frame is if you took this with shares or with options, but those would be two areas of concern to see a rejection. This could be building a bull flag before continuing its way up. So something to be aware of. I do need to fire up the live stream in the chat room. And get the audio going. Good morning, everybody in the Bullish Bears chat room. Good morning, good morning. How about a sound check, please? Hopefully you can see my chart. I'm using a different browser today, so I have to verify that everything is good. The window selection was different, so I want to make sure that you can see my Thinkorswim chart. And everybody says I lost sound. Goodness, goodness. Ain't that about right? All right, so I set the audio bridge. Hopefully you can hear this time. All right, good deal. So good morning, everybody. There was a little bit of news this morning. You know, the PMI numbers came out. We still have oil today to deal with. That'd be USO or some other products. I seen a shout out for a request to look at AXSM. This thing gapped up. I can still hear Lucian talking about something that gapped, wants to fill the gap. It needs to validate this range. So if we're not looking for a gap fill, and you can see that the buyers stepped in here and tried to keep this thing above $80. If the market isn't looking to fill this gap right away, then we would be looking for it to validate the price range that it now resides in. The market seems comfortable with the idea that its new valuation is above $75. We would look for it to maintain that. It's already tested that low twice. The hammer is giving an indication that the market's looking to keep it up there. I'm getting a buffer error on YouTube. Oh, other people will get error on it. Okay, well, sorry about that. I don't know why. So if you're interested in this, taking a trade off of the low, somewhere around that $74, $75 range, would be a decent entry after it validates that it really is going to maintain this. Between now and Friday, you could look to do some kind of credit spread below the market. That way you don't risk too much if it wants to break this structure and move back down. And again, anytime you're dealing with anything with a market that you're unsure of, use the tools that are at your disposal. So with this one, AXSM, you can see that they have products in the pipeline. There's fourth quarter 2019, 2020, 2020. Yeah, so they've got things in the pipelines. You can check the FDA also, and then there are corporate filings also. So what is it? Something S14. That would be more along Creed's niche when it comes to companies filing different records. SEC 14A. You can search that also on the day. So when you identify something that's got stuff in the pipeline, check it. Just to make sure. You should never know what you could get your hands on. Good morning, Rose. Good morning, good morning. All right, everybody in the Bullish Bears, we've got 10 minutes. Is there anything you want to look at this morning before the bell? By the way, I did post the watch lists for breakout long, breakout short, momentum long, and momentum short. You'll find them in the alerts above. Do not click on the link. You copy the link and post it into your Thinkorswim. MU has earnings today, very volatile. Gapped up 2 days ago, still looking for it to resolve that situation. It will report after the bell. It's consolidating. You can see here, if we zoom in, it's validating this new price range. Like Tom Busby talks about quite often, you get the breakout and then it comes down to validate the breakout before continuing its move. HEI, and for disclosure, I am in a trade in HEI. I have an iron condor here that we put on at earnings. It needs to maintain above the 120 by Friday's expiration. I'm not interested in closing this trade early just to lock in loss. I want to give this thing time to move around and bring itself back inside the wings. So it has this bear flag. When we have the flag, we've got a very clear pole, obviously. The flag, not so obvious. What we would want to see is a defined structure with multiple validation points. And that's not exactly what we have here. We've just got this gentle fade. The base has been clearly defined. If this breaks and gives us some indication that it cannot come back inside the wings before Friday, then we would look to manage the trade Until I see that, I'm not interested in closing it or managing it. Notice that when a market does break out below its weekly expected move, more often than not, it comes back inside. So we want to give it time to do that. Had a question on Nike setting into all-time highs. There's your ugly, ugly cup with a broken handle and then your move up out of it. It reached the edge of its expected move yesterday and pulled back. No surprise that it pulled back. It's what a market does when it reaches the edge of its expected move more often than not. For today, you don't notice that it didn't run into the close. It closed well off of its highs. So looking at today for a trade opportunity, this really needs to define itself. More than likely, it's going to want to close this gap before moving up if it's going to continue to move up. So gap fill first. Perhaps taking an entry somewhere around the 99.5 or 99 flat. Let's see what else we got. Dan gave a shout out on Tesla moving around in its pre-market. Had a question on Roku. Lots of sideways action in the last few days. Step out into the higher time frame. You can see that it came back down to this previous pivot point. It looks like the buyers stepped in, managed to keep it above that range. It is well within its weekly expected move, and it is an inside day. So you can see that yesterday we had market compression because of this large engulfing candle here. We've got at least 1 day of compression. I like to see multiple days of compression. Here is an example of why. This was the engulfing candle, this red candle. You had multiple days of compression and then a strong breakout from that compression. Here is another engulfing candle, inside day, strong breakout from that. Don't forget that if you're going to trade these bigger names, to look at the analyst ratings, see if it got an upgrade, see if it got a downgrade. Your broker, whether you're using TD Ameritrade or any other interactive brokers, IBB, whatever, they have analyst recommendations on their website. So if you're a customer, you get that access. There are also companies like you can see that this uses tip ranks. Well, there is a company called Tip Ranks that you can go to, and even with the free tip ranks, there is information that you can get that you don't have to pay for, including their daily buy ratings, their daily sell ratings. Now, this is the free. You can see I'm not signed in. I don't have an account with them. If you was to get an account, you would have access to more tools, more research, whatever. But even just the free stuff alone, you can get some trade ideas, get alerted to things that could potentially move today. Creed is bold. He put on an iron condor in FedEx. Now, FedEx is something that had been hammered all day long in Bloomberg yesterday about how Amazon had reached out to all the Amazon sellers and told them they're not allowed to use FedEx until after the holidays because FedEx is, quote, too damn slow. And then they had earnings at the end of the day after getting hammered by Bloomberg all day and by Amazon. I had looked at potentially putting on an iron condor in this, and I chose not to because of the previous earnings where it had a massive gap down and it didn't come back. Coffee. So since I am risk averse and it had this really disastrous earnings, an iron condor where a market does not come back is a losing iron condor. So I didn't want to end up in that kind of situation. Once a market does that once, it'll usually do it multiple times in a row. Target is a great example of that. You can see that Target had a little one, and then it got a lot darn bigger on the next one, and even this one again. So wanting to avoid a situation like this, I did not trade the FedEx earnings. But here we are today, and being able to play on the volatility from that earnings announcement, yes, I think we could have a lot of fun with this today. Just recognize if you're going to trade options in a product that had earnings, you're dealing with second-tier Greeks and vol crush. And if you don't understand what that means, then come over to the Bullish Bears and sign up for our yearly membership so that you can get access to the options educational content that I've spent my time developing. Yep, bears in Canada. Yeah, that's a mistake we see often. People don't lock in their profits, miss their opportunity, and watch their profits turn into losses. So there was the bell. When I'm waiting for price discovery in the first 5 to 10 minutes, I like to jump over to the Visualize tab, click on Index Watch, set the watch list to the S&P 100, and get a good idea of where the money flow is going, and I start looking for divergence in the marketplace. You can do this with all four. You can actually detach this window and set it on your futures grid so that you can watch all four. If you're trading ETFs instead of futures, you could set it on your ETFs grid. There has been many, many mornings where I've been able to catch a bullish divergence in the marketplace, call the bottom, and then trade a rally through the day from that trade. So that's the S&P. We've got a 60-40 with some major money flow to the downside. That's declining money flow. We can jump over and look at the Dow Jones, where we'd call that a 15-15, although it's getting close to a 20-10. Very bullish capital money flow. So this is not matching up with what's going on in the S&P at all. We had a real divergent marketplace yesterday. I'm hoping to see some market sink today. We can hope. So we're looking at a 60-40 in the Russell. Typical money flow to match the issues advancing. There's no divergence there. 70-30 in the NASDAQ with major bullish capital. So here we are yet again with market divergence. Someone asked to take a look at INPX. Notice that consumer discretionary is up. That's our two main sectors pulling us. The financials are down. Tech is weak. Industrials weak. Shipping and rail weak. So healthcare, energy, utilities, and consumer discretionary, a little bit of tech. So jump over here and look at INPX. Not sure why there's a lag today in the stream. I am using a different browser, but it's a browser that shouldn't have a problem. So a couple people say they can see the INPX. Some people say they cannot. I'm going to end up swapping browsers, I bet, just to make sure that we don't have this issue. But I'm still on INPX, this penny stock, so we can take a look at it while I'm waiting for the other browser to load. Looking left, be very careful when you're dealing with these cheap little penny stocks. They can rip your account apart if you're not careful. You can see that we're pushing right up into a pivot point. This thing is still moving, but it's in hundredths of a penny. So it went from 9 pennies to 11.5 of a penny. There is some resistance overhead. I don't know what is causing this to spike, but I would be very careful at that 12 penny mark. And I'm going to push the button now to log into the other browser. So give me just a minute while I shut this browser down, because I don't like that we seem to be having issues with the trading. So I'll be right back. Good morning, everybody that joined from YouTube. I do have my eye on the chat today up there on the YouTube, so if you are interested in taking a look at something that I haven't yet covered, give me a shout out so I can go take a look at it. I'm not your Google, so if you just say, hey, go look at FedEx, and you don't tell me why you're interested in looking at it, are you looking for a short entry, you're looking for a long entry, are you already in a trade and you're looking to get out of it, then that doesn't do me any good. All right, I'm back again. Sound check, please. All right, so I tried to use Firefox browser. Apparently it failed. Back to using Chrome. So that's my recommendation for INPX. Watch out at that 12-cent mark and 12.5. And unless you know exactly why this suddenly started moving up yesterday, then be very cautious and look for a dump, because this has moved 40% today, and a market that's moved up that much for no reason is more than likely to dump on you. You can see the trade here, the HEI. We brought in $80 of profit when we sold it, and if we was to try to close it now, we would have to buy it back at $1.58. Not interested in doing that. We want to give this market time to move. If we do need to close the trade, we would close the side that's threatened. That would be the put side. So you can buy back the puts, leave the calls on, let them go all the way into expiration. That way you get max profit for those. I sold a SPY credit spread yesterday. Dan was talking about taking a scalp in SPY. Instead of scalping it with naked options, I just put an at the money credit spread on. And there I just put on the order to close the trade at 50% profit. Creed's giving a shout on the futures. The NASDAQ is throwing a flag. This is the way that I watch futures, looking at all of them as a group, because they more than often move that way and you get your trade ideas. We do have divergence in the marketplace this morning, so they're not exactly moving in sync. Be very careful of that. News from Belgium consumer confidence falls, and then that's pretty much it. They are talking about voting on the impeachment today, so be cautious of that as well in the House. We've got a call out for ASLN. This is closing the gap from yesterday, from the close. Looks like it might be finding a little bit of support at that 2.5 range. One indicator that I always recommend people to use is the daily. So if you go in and load your indicators, just type in the word daily. You can see daily high low, daily open, and then you can add the daily 5, a market that is above its 5-day daily simple moving average. You would trade bullish, and if it's below it, you would trade bearish, and then you would ignore any trades that run contrary to that. So looking left from its current position, you can see it's trying to rally off that 45. That's this price area here, what I like to call a price shelf. Support zones and resistance zones function a lot better than just trying to draw a support line or a resistance line. It can give you a little bit more perspective. It's no surprise that this aftermarket price zone didn't hold. I would be more inclined to believe that if this is going to reverse and start moving back up, that it's going to find some support here from this closing price, yesterday's closing price. That would be the white line that you see on my chart. That is where the market closed yesterday. I need to move this grid back to where I can keep my eye on it. All right. So, Bears in Canada, you were asking about the credit spread. It was just a trade that I put on yesterday when SPY was going into the close and we suddenly started getting a lot of volatility. When Dan was streaming last night, we were dealing with a sideways market all day and then it started to dump like this. And I put on a credit spread at the money in SPY. You can see that right now that credit spread is underwater and SPY has ran right through the entire position. Rather than going in there and trying to scalp with a naked option, I had put on a 50-50, 1-to-1 risk to reward credit spread. So you wouldn't want to duplicate that trade because right now it's a losing trade. The good thing is that it's a defined risk trade, and literally, if I'm completely wrong, it's going to cost me $25. So the way I do business is I don't want to go and risk money that is too much money. I have a small account, so I'm not interested in compounding my losses with big trades. Trade small, trade often. Markets are making a pretty strong move up. The Russell is the dog holding us back this morning. Looking at Apple, this rally in Apple is the rally in the marketplace. Notice it's just coming up into this supply zone from yesterday. This is going to be an area of resistance, and it seems to be cutting through it like a hot knife through butter. Dan's given a call out on BABA high a day. I don't think ACB going to zero is very feasible. There are a lot of penny stocks out there. I would not be surprised if this becomes one of them. But at the moment, ACB still has a lot of backers. You can go into the product depth and you can look at its options. There's still a lot of money in there. You can also go over to analyze and go to fundamentals and look at ACB as well. And you can see what analysts have for buy, hold, sell. Not as much information in here as you would see on other products. It is a healthcare product. When it comes to the weed market, I do like to break them out into different sectors. Is it medicinal weed? Is it the CB oils? You know, what's it doing? What category does it belong to? My weed watch list has pharmaceutical and recreational. Any analyst who said ACB was going to zero would not be an analyst that I would follow from that point on. He would have lost all credibility with me, and I would find a new analyst to follow.
Order filled.
All of the weed stocks today seem to be getting hammered. There are a few like InBev that are slightly up on the day, and PYX. IIPR.
Stop filled.
That is a MACD. It's just a modified version. It's what they call a detrended MACD.
Order filled. Stop filled.
When it comes to using the MACD, we were talking yesterday about different indicators. People that try to use indicators on an intraday basis that were built in the 70s and were never designed to be used on an intraday basis are going to struggle to be profitable. And so we were talking about using an indicator from what we call the anchor chart, which is the higher time frame, getting your analysis from that and then only trading in that direction. All right, so this is saying that momentum and trend is moving up in the Qs on the daily chart. So then we would go into the intraday chart and we would only trade in that direction. And we would ignore any trade that looks to be going short. Of course, the market just took a reversal. Remember that reversals start from the inside out, and trends and momentum can be seen from the higher time frames in. So it all comes down to the type of trades you're looking to do, and then you ignore all trades that run counter to that.
Order filled.
The market is turning a bit, coming back down to its open. That's a pivot point if you're looking at the Qs. If we jump back over to SPY real quick, what we want to do is look at yesterday's price action and identify pivot points where price could get hung up, pause, consolidate, build a base. Let's see what else we got. Just scrolling through the chat here real quick. Remember that if you're trading options with a smaller account, you really want to try to avoid things like Facebook or Google. Go into the trade tab and look at the strikes. If it's $2.50 wide and you've got a small account, you should find something else to trade. There's no reason to be messing with something with such wide strikes. Find something that's got 50-cent wide strikes or $1 wide strikes and avoid getting tangled up into something this wide. All right, for everybody out there on YouTube, I was going to shut you down, but I see a call out there we're going to check on first. CSCO, topping pattern, faded to support at these pivot points from yesterday's price action. Look for that to build a base there. If you bought in at 43.50, look to take some risk off the table. I don't know if you did that with options or shares, but you don't necessarily have to close the entire position. You could scale out, take some profits, leave some shares on for runners or leave a contract on for a runner. You don't necessarily have to just shut down your entire position. Scaling into or out of your trade is a great way to do business. Looking at the higher time frame, you've got this very small cup handle and then the rally out. Looking to close this gap would be appropriate. If we was to turn on the volume profile, that would be an area where there is least resistance, but you can see that there is resistance, all these previous pivot points back here that it has to work through. Recognize that it is outside the boundaries of its Friday expected move. Ooh, zoomed too far there. So that green line was the top of its expected move for the week, and it has already surpassed that. Wouldn't be surprised to see it fade down to the 46 by the end of the week. All right, so I'm going to kill the stream. If you are not yet a member of the Bullish Bears and you're on YouTube, come by and sign up for your 14-day free trial. Come into the room, take a look at all of the free content we provide, sign up for a membership, and have access to options education and options strategies. Their advanced level options material, including very specific entry, exits, delta selections, and trade criteria.